Peter Eliades with you, Stock Market Cycles Update. This is Monday, March 2nd. We're usually pretty organized with these things, but this is some of it's maybe stream of consciousness. I just want to review with you some of the things that we've seen over the past couple of weeks that have made a dramatic difference in what's been happening in the market. And a lot of times people say, well, how do you use these projections to actually trade the market or take positions or whatever? I'm going to show you that today. This is a kind of real-time examples in terms of what we did with our own accounts and money management. And I'm not going to show you the confirmation sheets, but if anyone calls me a fibber or a liar, I'll be happy to show them to you. Anyway, let's start out with this chart. This is a chart of the S&P 500 cash index, and we're going back to the all-time high, which occurred on February 19th. Now, any of these levels here could have been used to take some kind of negative position, short position in the market, because you had come into this upward projection zone at the same time. We're not going to show them now, but at the same time as you were reaching some potentially very important trend lines. Those of you that have been following us on a day-to-day basis know what those trend lines looked like. Okay? So then we started getting one by one little short-term downside projections that kept growing. So that's one chart. Let me show you the third chart here that basically shows the same thing. It also showed that this should be a top up here. Now remember, we reached the top up here, but had a pullback, and we anticipated what we called a loop projection. So we got both a nominal 20-day and a nominal 5-week loop projection to the upside. They both came in around the same level. So on this day, February 19th of 2020, we took a position for ourselves and our clients in RYTPX. Used to be the RightX group of funds. It's now Guggenheim, but the RY represents the RightX that still carries the name. That is an inverse 2x, in other words, leverage of 2 times, S&P index fund. So for every percent the S&P goes down, the fund goes up 2%. So it's 2-to-1 leveraged on an inverse basis. So we took a position there, okay? So now let's follow this forward. Let's go to the next chart we want to show you, and we showed you this chart last Friday. Look at this. Virtually a perfect meeting of the upper projection line, 2951.08. We didn't quite get down there, and we told you that. The close was 2954.22. So it missed by about 3 points of getting down to the full projection. That was enough for us, and I think we said it at the time. That could have fulfilled this projection. So now, and that's why we headlined last Friday as things getting a little tricky. Now we have to look for the possibility of some kind of rally entering into this week. And lo and behold, some kind of rally. What a spectacular rally we had today. So how did we handle this with our position? We could have gotten out right here on Friday because we came close enough to that projection in our 2x short position. We didn't do that. What we did was we waited for this morning. They priced the mutual fund twice in the day at 7:45 in the morning Pacific time, 10:45 Eastern, and at the close of the market day. So because we saw the rally start to occur pretty strongly before 7:30, which is the deadline for trading, we put an order in to get out of our inverse 2x positions in the S&P 500 cash. That's RYTPX. We're going to look at the fund itself in a minute. And so we got out somewhere around this area in here just before the huge rally began. We're going to come back and look at the S&P and look at RYTPX to see what has happened and what it might mean for the next couple of days. But I wanted to show you that first in the S&P, and now I'm going to show you the same charts with the mutual fund itself, RYTPX. Look at this, right down here. Now, if I were to go out on this chart, I mean, this fund has done nothing but go down for I don't know how long. As you'll notice, the market is nothing but go up for we don't know how long. I mean, this is not the beginning of the decline by any means. This thing has been declining on a serious basis since January, late December of 18, January of 19, but on a long-term basis since since what would be the important closing low in the S&P would, of course, mark a high in this because it's the inverse fund. So, but follow me on this one now and see what happens on an inverse basis. You got the projection again right down here. This was the day that we took the position. We took a position in the fund because of both the combination of the projections and the trend line I showed you on the S&P cash. So we took a position on the fund at the exact closing low of the fund. Remember, it's an inverse fund. And a price of $24.83 on February 19th. Now, look, one of the important things to look at here is this downside projection. Let's look at the next longer chart, and you will see that. Look at this. See this projection box here? Again, here's the lower end of the projection box. We came down to the lower end virtually exactly. Close of 24.83. The low side of this projection was, well, actually it was 24.31. So it would have allowed for a little bit lower. But this position was taken in a combination of projections and trend line. And that's where we took the position at the exact low, and we had this kind of move. Now, once the move starts, you have to stay alert because you want to start looking at projections. And let's take a look at the equivalent projection on this particular chart. We didn't show you this on Friday. We showed you the S&P projection, but we did not show you the fund projection. But look at this. Here's the fund, inverse fund projection on Friday. Bingo! So when this occurred, when this just got up to the lower end of the projection, now you've got to be alert. You don't want to hang around and hold on in this kind of big move to the downside as the market made a big move to the upside. So what we did, as we told you, was watch very closely this morning, looked at some intraday projections, and got ourselves out at a price of 31.66, which is right about here. So in other words, we entered the position at this exact low close, and we exited the position at 31.66 morning pricing right about here. That was good. If we had done full positions at both levels, would have been good for about a 27% profit in 7.5 trading days. As it turned out, we ended up making just over 20% because we had exited a partial position to take some profits. But that's how you use the projection software. It's not going to work as dramatically every time as it did here. This was obviously a dramatic, unprecedented market decline from an all-time high. And so don't expect that to happen every time. But I wanted to give you an example of what we look at and how we use the projections to attempt to take either position trades or short-term trades in the market. With that having been shown, let's take a look at what's happened very short term here. And this is important too. Here's the RightX fund today. This is where it closed. A big decline. I mean, this is almost a 10% move. A close of 32.18 to a close today of 29.25. That's 3 points. You're almost talking about a 10% decline in one day on that. But here's the important thing. Look at this. It gave a downside projection today. This is the shortest. I don't usually show this projection, but the offset for this is 1.75 to 2. That's what these offset lines are, and that's where this projection came from. So once you look at that, what you want to look at is the next longer projection. Now, the far side of this projection box is all the way down at, what number is that? 28.93. Let's take a look at the longer term projection. I usually pause when I do this And so I don't waste time for you, but I want to show you the workings of the projections and what we do. So here's what I would do. Okay, we go to Studies, Edit Studies. Here's the 175 to 2 right here. And the status of that indicator is on. So now we want to customize. So 175 and 2. The next longer series of projections would be double those. 3.5. 3.5. That's the shorter offset. And 4 is the longer offset. And then we clear the screen and look at this. So this appears to tell us that we did not get a lower projection. We could have gotten both the 175 and 2 and the 3.5 and 4 today. We didn't do that. So this is holding out a carrot, saying that maybe this is all you're going to see on the downside. What we need to do after this, though, is look at the equivalent intraday projections. So mind you, these are closing projections, and this told us when we looked at the 175 to 2-day offset that we have met that projection and have not generated any further projection. Tomorrow, all it takes would be a close. Almost any kind of down close tomorrow would give a significantly lower projection. I don't think that's going to happen, but again, that's what I think, and what I don't think has nothing to do with projections. What you act on is the projections, not what you think. So I don't think we're going to get that lower projection. If we did, it would be almost all the way back to the old highs again on the S&P and the old lows again in this indicator. So there's a decent chance right here that we saw in one day some kind of closing low. That much having been said, I want to take a look with you at the S&P equivalent intraday projection. Now, this is the equivalent of a 1.75 to 2-day offset. And that's saying that you have not reached the lower end of the projection, which would be 3152. Where is it? At least up to 3152.35. And that's a long ways up from here. You're talking about 60 points. This projection, let's put it this way. If we reach this projection, I think there's a chance that we do at least a 618 retracement, get all the way up here in terms of the S&P. I think there's also a chance that at some point, because the closing price equivalent projection here has been met, that this projection might be invalidated at some point tomorrow. It will be difficult to do it. There are 1, 2, 3, 4, 5. There are 5, 6 of these bars tomorrow. So by the end of the day, if you get down to around these levels and you have not reached the lower side of the projection, you could begin to invalidate it. But these are the things you look at with this. I do hesitate to call it magical software. It's just the way the market works, folks. This is the way the market works, in cycles. And the projection software works those cycles out, gives you knowledge that no one else that follows the markets has. If you don't think that's a great advantage for you, then you haven't been working with the market for very long. That's going to be it for now. I don't know how much longer I'm going to do these updates because in a way it's like giving too much free information away. But I do want to get you hooked on this software. That's the primary motivation for doing these updates. And I think by now, if you have not been hooked on the updates, then you haven't been paying attention. Thanks a lot for watching. Click on the bottom right, subscribe if you haven't done so yet. Click on the bell when it comes up. You'll be notified of any new updates that go on. Thanks a lot for watching.